D Street under pressure. The Nifty slips below 25,000 as all sectoral indices correct, led by the PSU banking index. The broader market sees deeper cuts compared to key indices.
SBI slips more than 2% after brokerage firm Goldman Sachs downgrades the stock to sell rating and cuts the target price to 741 rupees per share. Meanwhile, SBI Card climbs more than 4% after Goldman Sachs upgrades the stock to buy from sell, raises the target price to 913 rupees from around 652 earlier.
Vodafone Idea falls 10% after brokerage firm Goldman Sachs issues a sell call on the stock with a target price of 2.5 rupees per share, forecasting another 300 basis points drop in the market share over the next 3 to 4 years.
KEC International climbs more than 2% after the company wins orders worth around 1,400 crore rupees for the design, supply and installation of transmission lines in Saudi Arabia.
Viatech Vibhag zooms nearly 5% after the company bags an order worth 2,700 crore rupees from the Saudi Water Authority for a desalination plant.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. With me is Reema Tendulkar. Well, Reema, a bit of a down day to kickstart trade. I believe there's a technical issue out there, which Nimesh will explain to us in just a bit. But for the time being, we have broke the recent lows. I think the 20 DMA is still around 250 points away from current levels. So a bit of a down day, but dips have got bought into periodically is what we have observed over the last few sessions. So let's see whether or not there's a recovery in store.
The Wix has shot up nearly, 20% today, but it's still just below that 15 rupee mark. And now for the week, we've got cuts on both the Nifty and on the Sensex. But let's straight away get to the first corporate in the show, and that's Bazar Style Retail. It had a flat listing, so the stock opened at 389, pretty much at the issue price. We have with us Chairman Pradeep Kumar Agarwal joining in. Thank you very much and congratulations on the listing and your life now as a public company. So the numbers that we have, sir, are till FY24. Can you give us a sense of how Q1 has been for the company and even the first half of Q2? What is the kind of growth rate that we've seen so far in FY25 and what should we expect for the remainder of the year?
Yeah, in FY24, our revenue was 972 crores. And after getting listed, the F1 25 number will be, quarter 1 25 number will be published by within 21 days.
So not asking for exact numbers. I understand you can't share the exact numbers, but give us a sense. Has H1 been better than H2? H1 been better than last year? Have things picked up? For the full year, should growth be similar to last year?
Yeah, we are growing at the CAGR of 33.5 years in the previous year, and hope and we intend to grow at the same rate, and number will be better.
Okay, all right. Hi, sir. Good morning. Nigel on this side. Congratulations. It's been a good listing. The markets are at the low point of the day, but your stock is at the day's high. So you're saying that growth can continue. We'll take it as a compounded growth of around 30% from year on as well. What about margins? Gradually, there was some improvement. Can margins cross 15%? Can you maintain this mid-teens, or do you believe that it can even go higher from here?
Yeah. Our margin in the last year was 33.51, and our private label was 38%. The contribution of our private label was 38%.
Mr. Agarwal,
and we are going to improve. Yeah,
Mr. Agarwal, when we talk about margins, we were referring to the EBITDA margins at 15%. The gross margins, yes, it was more than 30%. So you could give us a guideline on both those two parameters, gross and EBITDA margins. Please go ahead.
Yeah, and last year 33.51 was the gross margin, EBITDA was 14.61, and our private label contribution was 38%. We are growing the private label, and the margin will be improved from the last year. We are going to working on over it that margin will surely improve in the coming year.
So as a part of your business plan, what is your expectation of how much private label brands will contribute as a percentage of sales? Will it cross 50% from the current 38%? If yes, in what time duration?
Yeah, 30% was in the last year, and this year we are hoping that it will be around 50% or more.
Oh.
Okay.
Interesting. All right, got that. Give us a couple of more aspects, sir, in terms of numbers. The working capital days has come down to just 9 days. I think it was around 18, 20 days earlier. So where does this number stabilize at? And the SSG growth, what are you factoring in for this year?
Yeah, in the last year, SSG was 9.41%, and hope all the number will be in the coming year good. Market is very good. You see the numbers of peers; they are giving the very good results, and you can compare that if the peers are giving good number, our number will be better in compared to previous year also.
And working capital?
Yeah, it will be better.
So getting back to that aspiration that you laid out, that private label brand contribution will cross 50% this year versus 38% last year. How does this change the financial? Is it that the gross margins are higher for private label? Is it that it's a faster growing category?
Yeah, in our private label, margins are little bit higher than the regular label. So ultimately, our margin will increase, and so that the EBITDA will also increase. And ultimately, the PAT will also increase.
Okay, so what are the gross margins on private label versus the non-private label?
Basically, there is a gap of 1% between the private label and the other labels.
One more question. What is, how many stores will you be adding in FY25? And are any of your stores, because, periodically you do close stores. Even last year you had some store closures because they weren't getting the required footfall. So this year, your store count addition, and would you be looking to close any stores?
I am not giving the exact number of how much stores we are going to add, but I can assure that whatever numbers we have added in the previous year, we intend to grow at the same rate.
Okay. So last year you added 33.
Because we are in the yeah.
So last year you added 33 new stores. Okay.
Yes, it will be 33 and more, maybe more, and we have grown at the store count. Our store count has grown at the CAGR of 24% in the previous year. We in the future also we intend to grow at the 24% or more.
Thank you very much, Mr. Agarwal, for joining in. The stock is up close to about 4%. The management is confident that growth will continue to sustain at that 30% plus growth rate that they've seen over the last few years. Margins will continue to expand as the company increases its contribution from private sales labels, and there will be an improvement in the company's working capital too, and expansion will continue. We'll slip into a break. We'll come back and we'll invite Rohit Sajja, who is the President of Business Development and Operations at Powermech Project. Stay tuned.
Welcome back. Well, as promised, let's get this rare conversation going with the management of Powermech. The stock has been a good performer in the past year or so, and even the last few years. They also announced a 1:1 bonus issue earlier in August. To understand what's the way ahead and how things are shaping up, we're joined by Mr. Rohit Sajja, who is the President of Business Development at the company. Hi, Rohit. Good morning, and thanks a lot for speaking to us here on CNBC TV18. Let's get a couple of numbers out of the way. The last updated order book number we have is around 57,000 crores odd. So what is the updated number, and what's the inflow that you're looking at for this year itself?
Perfect. Yeah. Thank you, Nigel. Good morning. And thank you for having me, firstly. And it's been a real pleasure to be here, especially as we celebrate Powermech Silver Jubilee this year. We are really excited to celebrate this milestone, and I couldn't be more excited about the timing and the opportunities that lie ahead. So giving you a little bit perspective on the order book. So we have an order book of around 57,000 crores, which includes both the mining projects, which contribute to around 39,000 crores of this 57,000 crores. So X mining, we have an order book of around 18,000 crores.
Got it. All right. Let's talk about the execution as well for the year. Given that you have such a big order book, what kind of a revenue growth are you factoring in comparison to last year? And some part of that MDO revenues will also reflect in this year. Could you clarify on that factor? What's the margin picture we should work with?
Yes. So last year, we achieved a consolidated turnover of 4,200 crores. And we expect to grow by 17 to 18%, 17 to 20% this year. And last year, MDOs have contributed to close to 40 crores, Nigel. And this year, we expect to do 180 to 200 crores from the MDO business. And going forward, perhaps there is a ramp-up schedule for this MDO when we plan to achieve peak rated capacity by 2027-2028 financial year, which is when we are going to see 2,000 to 2,200 crores of revenue contribute from the MDOs contributing to the top line.
So just to get the numbers right, 40 crore was the MDO contribution. That's the mines business last year. This year, it should be closer to 200 crore. And by FY28, that number scales up to 2,000 crore rupees. That's the ramp up.
Right.
Schedule.
Right.
Got it. And
2028 is when we touch peak rated capacity, which is 9 million metric tons per annum. So that's when we'll touch 2,200 crores in revenue.
2,200 crores by FY28. That's the peak revenue potential.
Yes.
Got it. How will this change the margin profile of the company?
So in the mines, we expect to do around 25 to 27% EBITDA. So when we touch PRC, peak rated capacity in FY 27-28, it's going to increase the EBITDA levels by 1.5 to 2% from the current value of 12.2. So we see a percentage increase of 1.5 to 2%.
But this year, FY25, when the mining contribution is going to be less, closer to 200 crore, what will be the EBITDA margins?
They'll be around 12.5.
Okay.
Got it. So for this year, we are working with a 17 to 20% growth on the top line with margins at around 12.5%. Are we getting that correct?
Right, Nigel. Yes.
All right. I believe there's a big potential as well in the international market, and you'll try to make some, entry points out there. And I believe you were heading the international foray as well. Could you tell us, Rohit, as a percentage of the total mix, what does it contribute? Or if you want to give it to us in absolute terms, because your MDO is going to be domestic, which will increase the pie totally. So what was the international revenues that you got, say, in the last year? And where do you see that number headed?
So, Nigel, last year, overseas revenue contributed to little over 250 crores to our top line, which has a combination of both power plant construction and also O&M activities, of which O&M is around an impressive 221. And we see this trend. So this year, the 221 crores of O&M overseas revenue is going to increase to 300 crores. So I see this trend going forward as well, because we are also working with a lot of public sector utilities there, like Dubai Electricity and Water Authority, Sharjah Electricity and Water Authority, Saudi Electric Company, and other private power utilities like Aqua Power, Nomac. So, and I see this trend of O&M being outsourced in the overseas, especially in the GCC.
Okay, and that comes at better margins as well. I recall that O&M part of the business, which as a percentage of the mix as well, I think it's holding at around a fourth of it. But just to get this number out of the way, 250 crores of international revenue, say in the next 3 years, what does this number go to, since there's such a big potential?
Yeah, so this number is going to touch in the next 3 years 450 to 500 crores.
So what would the consolidated revenues look like We're expecting 2,000 crore from mines. We're expecting 450, 500 crores from the international business. So on a consolidated basis, say by FY28 or 5 years from now, what are the numbers, revenues and margins?
We expect to do 10,500 to 11,000 crores.
Okay.
This is by FY25.
FY28.
28.
Yes.
Got it. All right. And margins there would be an upscale. So it will be around 13.5%, 14% at least?
At that point, it's going to be, 13.5 to 14% EBITDA.
Got it. Very quickly, Rohit, the stock has done very, very well and you're sounding optimistic about business. But the promoter entity, they did come and they sold some stake, in the recent past. Is there a plan to take some more money off the table? After all, I think the stocks in the last 6-7 years is up, I think, 8-9 times. So will the promoter entity look to sell some more stake?
No, right now we don't plan to sell any more stake, Nigel. We plan to keep it as is.
Okay. And since you're so involved with power projects, what about renewables? Because as of now, it's the, the traditional way of power. Thermal power projects is what you'll be looking at. Renewables as a percentage of your mix, what is it? And do you see a big potential over there since you, as it has been working with companies like NTPC and the likes who are now looking at renewables?
Yeah. I'll give you a perspective on this renewables. We have been doing a lot of work on renewables, especially the green hydrogen space, Nigel. We have formed a couple of partnerships with electrolyzer manufacturers abroad, mostly from Europe. And we're also looking at participating in the side scheme, which is being floated by SECI. We more so want to participate in the hydrogen derivative space, the green hydrogen derivative space, which is green ammonia, green methanol. And we want to ride on these incentives that SECI is providing us currently. So this is broadly our plan for renewables. We are exploring opportunities in the green hydrogen space. And we plan to do so in years to come. We're also exploring a few other opportunities in Saudi Arabia because of our presence in the region for the last 10 years. Even Saudi is coming up with a lot of green hydrogen projects.
Do you have a capex plan in mind for the next 5 years that you've earmarked?
Yes. So capex, standalone capex, it's not. We are gonna let the capex be at in between 100 to 120 crores, which is going to be commensurate with our growth. But the mine capex, which is we plan to deploy around 750 to 800 crores over the next 3 years to get the mines up and running.
Got it. Okay. Just one near-term question then. I missed, what is your current order book right now after the order inflows that we've seen as of today? And how much of it will be executed in FY25? And what is your L1 pipeline?
So the current order book stands at 58,000 crores, ma'am.
58,000.
And this year we plan to execute 5,500 crores of that. So of the 58,000 crores, as I mentioned earlier, 39,000 crores is from the MDOs. Right? So you exclude those off, it's around 18,000 crores. And of the 18,000 crores, we plan to execute 5,200 crores and MDO revenue of 2,200 to 250 crores is going to get added. So the total revenue we're looking at will be around 5,500 to 5,600 crores. And the L1, the projects that we bid for stand at 13,500 crores. And of this, the L1 pipeline is close to 2,000 crores. And the tenders that are yet to be opened, 10,000 crores.
Got it. All right, Rohit, thanks a lot for joining in. So we'll take all that guidance and we'll hold you to it. You have an ambitious plan for 2028. And more importantly, the promoters clarified that in the near term, there's no plans to sell stake in the company. Thanks a lot for joining in. Well, for the time being, we slip into a short break. You come back, we'll continue to focus on markets and stock-specific action. Don't go anywhere. Welcome back. There's been some recovery from the lows of the day. So we went down to around 24,900 odd. And from there, we've seen a bit of a bounce. HUL, that's the big weight in there. That's trying to support the Nifty. So that's pulled back a little bit. Shriram Finance is not, it's one of the lightest weights actually on the Nifty. But that as well has moved from the red to the green terrain. So good news out there. And, otherwise, we are seeing a few stocks that are coming for a pounding. Mahindra & Mahindra has moved lower. L&T has moved lower. Those are larger weighted stocks on the index. So when they move down, they take the Nifty a little bit lower. For the time being, though, we'll wrap up on this edition of Chartbuster. That's it from Rima, myself, and the entire team that put this show together. Trading Hour comes up next.